Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, February 9th, and in this video we're going to be looking at all the major averages, what they're doing, and some potential names that you can actually buy right here, right now with defined risk. Now, one thing I want to say about the market is, it continues to move higher, and as it continues to do that, the potential for a pullback is always it grows every day. Eventually the market's going to pull back, and the more buyers we have on board, the more potential that pullback could be, bigger than what you would originally expect. So that's just something to be aware of. The more buyers we have that are invested in the market, the more cheerleaders we have, and that leads to basically, eventually there will be a lack of buying at some price level, and it's going to lead to more downside. So that's just something to be aware of. However, I do not think this uptrend is over by any means. Any sell-off should be a buying opportunity. You should look at it as a buying opportunity. And the reason why is because any pullback, say you get a pullback back down to these lows, that's not that big of a pullback, and it should be bought at least for a test back up to the highs. If there is a more severe pullback, I think you still look at it the same way. Even if it comes back to the value area high over the last 6 months, you should definitely be looking at as a buying opportunity. And the reason why is because you're buying weakness. Eventually, you look to buy the weakness with a bounce. After the bounce, you can easily define your risk and place a stop right under the bounce. So you're basically buying on the dip, which means there's more potential for upside, and you're defying at a low risk opportunity, low risk, defined risk point in time in the trading in the chart. So as far as direction goes, S&P looks like it wants to go higher. NASDAQ looks like it wants to go higher. Now, if you look at something like transportations, they've been trading sideways for the last couple of weeks. That may mean, we are at the bottom of this mini range, and it could just continue higher. But maybe it's starting to form a mini top. It's hard to say, because if you look at this whole moving average, this blue line, it's literally moving straight up. 50-day moving average moving up. Donchian channel is ratcheting up. And 200-day moving average, we just busted through it. So really, this is pretty flat if you look at it on a bigger time frame. And what I mean by that is this is basically one big trading range. We've seen the bottom twice. This is the top. We should go and test the top. And when we do, we'll probably have some type of pullback. But for now, there's no reason to say that this is not going higher anymore. Now, one thing to say is you can look at when it rallied back in late 2010, we had a period where it did go sideways, and there was a sideways range, but it was still definitely right to be a buyer on weakness. And I think in general with the market, not just with transportation, but with the market in general, you're going to see the same dynamic, and your job is to find what you think will outperform. Just to continue on, gold continues to trade in this range. I don't think, you definitely look at 1755 or so to 1720 as your range, but I think there has been a lot of selling pressure in this price, so I do not think that this point of control, though it matters, I'm not sure how much. Let me take that back. Yes, it matters. Yes, we're going to get a move from this 1750 level, this box. We will get a move from those levels. It's either going to be back down or it's going to continue higher. My bet is we're probably going to stick in some type of range and eventually have a bigger move, a month or two from now. So that's just my opinion. Silver looks pretty good, continues to consolidate. It looks like we're maybe forming some type of topping pattern. I view the range definitely as something like this, and So any weakness, you look at this point of control, $32, $2 off from here. That's probably where you want to be a buyer, but right now it's hard to say because we're at the top of the range. Oil continues to trade in this range. After this big vertical move, it's basically working it off. I look at this $100 level. That's eventually going to be your line in the sand. Right now you're trading the extremes around 95 on the downside, around 102 on the upside. That's all you are, and that's all you have, and you're in the middle of the range right now. So it's really a do nothing. Natural gas, I think it's trying to carve out some type of bottom. I look at these recent lows and see that, maybe there is a potential that natural gas is finally bottoming. And what I'm going to do is, let's see, okay. The last 30 days, we have January's point of control, $3. And we have the overall composite, the 30-day composite, which includes, January and February, point of control right at 248. Well, we're trading right at 248. In fact, the bottom of this high volume area, about 245. I think that matters, and I like the fact that natural gas is trying to hold above it. I'm not trying to call a bottom, but at the same time, I'm looking for a trade setup, and this is pretty close to one. And what I like is you can define your risk, whether you have your stop right under 240 or maybe even 233, which is, these recent lows here. However, I think 238 is the level you want to look at, and the possibility for a move back up to 3, I don't think you take it off the table. And that's why I think natural gas, you look at the point of control over the last 30 days, it's starting to matter, and it's more, this volume down here is heavier than this volume up here, which leads me to believe that the likelihood of this being a bottom rather than, back at 310, it's a lot greater probability that we're trying to carve out a bottom, a tradable bottom, off of these levels. Now the euro, it continues to make its way higher. However, it definitely looks just like the S&P. Oh, that's because this is the S&P. The euro continues to try to move higher. I think we're at a interesting time on the euro. I think we're close to a shorting opportunity, and I'm not sure if it's going to be a longer term trade. I think we're trying to carve out some type of base in the euro, and I look at this 130 level or so as the potential for that. What I'm going to do is bring over the hourly chart that we were just looking at. So what you're seeing on the euro is a continuation off of January's point of control level, a continuation higher. February, we're creating a higher volume area up here. If this becomes the point of control, just like it is down here, if that switches to up here, and you really get some volume printed around these levels, you could easily make a case for selling against December's point of control. And you look at the overall trend. The overall trend is still down, and it's been right to sell pretty much at the top of the channel, and we're there now, and it's against the last 6 months point of control area. So I don't think it's quite ready yet. I think you can still, if you're long the euro, you still ride it higher until it really starts to get shaky. But a move down to, basically back down to these levels here, 130 or so, these swing lows back when it pushed higher and then consolidated, those lows there, I think that would be your downside target. But for now, it's a long euro, which makes you want to bring up the dollar, and the dollar makes you, it makes me want to get long dollars, and the reason why is because we're holding this point of control 3 days in a row now. Really, 1, 2, 3, 4, 5, 6, 7, 8, 9 days we've stayed at the bottom of this range. That's good consolidation after a nice move higher. What I think that it's setting up for is a long dollar, and I'm going to bring over the hourly chart, and what we're seeing here is point of control forming at the bottom end of the range in February, just like it did in January. I think this is setting up for one big range up to 79.70, 79.60 on the upside, 78.50 or so on the downside. Right now, with the volume having more significance since it's the 6-month point of control, I think you put more of an emphasis on the support level, these lows, than you do on these highs. However, your first target would be up towards these highs. 70.40, 70.42 or so would be your actual target. So I think that the dollar's trying to form a bottom, which means the market's probably going to form some type of top. With that said, let's finally get into some stock picks. American Express, there's absolutely no need to want to sell this name. It continues to trade at the top end of its range. What we're looking for is a full-on breakout of American Express. If it doesn't happen soon, we'll probably have some type of pullback back down towards 50, but I think you do view that as a buying opportunity. Arch Coal, this is something that a name, I think coal in general, you want to keep your eye on. A lot of point of controls at the bottom end of the range, which means there's a lot of significance at these levels. On Arch Coal, call it from $16 to $14, $2 range. You've had a lot of volume printed, and if it's starting to look bullish, and the reason why is because we have lows we have flat lows, and we kind of have highs that are coming down. So you have lower highs and a flat bottom against point of control. What I really like is today's action. I think you can place a stop under yesterday's low and see if you can get a push up towards $17, $18. If that's the case, then you're risking about 60 cents for $2 or so, and I think that's a pretty good risk-reward ratio for Arch Coal. But realize it could potentially, it could easily push up towards 20. And with that said, you should let it work for you. However, if this is like a mini high base off of these lows and this continues higher, you're going to be kicking yourself if you didn't buy at this defined risk place and time. Similar with Alpha Natural Resources, the only difference here is we're getting higher lows. Point of control support, $20. We held that, and today you could define your risk. This name was up 2.5% today, and I don't think that's it's a volatile name, but I don't think it's something that you should take your eye off of. The hourly chart, you can see point of control 2 months in a row at the bottom end of the range. We bursted off that in February. Now we have point of control in February right at these lows. This is close to a pound the table moment. It's really time to get long. However, until it proves to us, until the action, for example, if we get another up day tomorrow with a decent size, I would have no problem adding to my position with expectations of a continuation to the upside. So I do think coal is at an interesting moment in time. Patriot Coal, looks the same, and that's what we want to see. We want to see them start to perform to the upside. Baidu looks like this is going to go test 145, a $10 move or so on the upside. Maybe a $10 call spread or so makes sense. The only thing I would say is look out for earnings. I do not know when earnings are. Actually, yes, I do. Earnings are, looks like the 16th of this month. So next week, you'll have earnings next Thursday, actually, on Baidu. Perhaps we're having a pre-earnings run. That's what it looks like. Had a very good day today, and I wouldn't be doubtful if a lot of people are short this name, and if that's the case, it should spur a pretty decent run. However, just beware of earnings. Jumping around a little just to do, it's alphabetical on my list, so that's, but Baker Hughes looks like we're trying to carve out a bottom. What I'm looking at here is You have point of control support, $48 or so. I think that level matters, and I think it's going to give you an opportunity for a trade. Perhaps this continues lower, but regardless, you'll have a trading opportunity. If it's anything like the market, we should have some type of push higher, though. Comstock, this CRK, I tried to, well, I didn't actually buy it, but try to look out for a potential reversal here, just because there's so much volume down here. We're looking for some type of push to the upside, for example, above 13 or so. If you want to keep this on your radar, you can. However, the trend is definitely lower. We just have a ton of volume down here, so the potential for some type of reversal is there. CSX, I would like to say that you can get close to defining your risk on this trade. If I zoom in, we have a trading range that we're currently in. We're at the bottom end of the range, and I think you can define your risk and put your stop under yesterday's intraday low, which was 21.86, and your thesis would be that this box right here, today's up day, was enough evidence that we're probably going to see higher prices, similar to what we saw back the last time it was at these levels. One thing to point out is point of control is at above this level, so maybe we're forming some type of top. One other thing to mention is we do have a lower high within this range, and that's something to be aware of. Maybe this is something you want to stay away from for the next couple of days. However, I do like, considering this is, we're starting to make higher lows, higher highs on this, I do like buying in the middle of the channel. If we do get a pullback back towards 21, that's probably the place where you would want to buy a decent amount of CSX. Devon Energy, poised is what I think about this name. We have a very tight channel, 66 down to 63 or so, a ton of volume in this range, and it's going to break out one way or the other. My guess is to the upside. I would say you could look to get involved right now. However, earnings are, looks like the 15th, so that's, you have earnings coming up in this name, and maybe you're making a pre-earnings run. If you want to be long Devon into earnings, one thing I would suggest is maybe owning a call spread out 3 or 4 months, something along those lines, so your risk is defined and you're not scratching your head if Devon drops down to $50 and you're holding a stock from 66. So that's just something to be aware of. Also, one other thing, it is at the top end of its range right now, so make no doubt about that, and the bottom end is more towards 63, so I'd buy small. I didn't cover Chesapeake Energy, but what I have is poised, and you look here, this could be, this move, these basically below $22, this could be one big rejection. A $2 rejection should lead to a minimum $2 upside swing, and what you would look for is a move back up towards 25 or so. And the reason why is because you have point of control for now 3 months going on at these lows in this general level, which means you're going to get a move one way or the other. I like the fact that the whole moving averages are underpriced. We just need to see follow through from actual buying pressure, and if that's the case, you definitely want to jump on the Chesapeake train. Ford looks like it's making some type of top, and I want to say the top of the range, not the top of where Ford's going. I view the bottom of the range around $12, top of the range 13. Pretty easy range to trade, but you without a doubt want to be a buyer on the weakness. Look at this momentum that's starting to come up, these moving averages. It's going to be screaming buy me on anywhere towards $12. You can even buy it at $12.69. Just realize, we're probably going to be range bound for the next month or so, and that's just something to be aware of. Halliburton, my hopes are this isn't trying to make a top, or I guess starting to roll over. What I see here on the monthly, looking at monthly composites, $36 definitely matters, and if we drop below that, we should trade back towards 34. And if that's the case, then this is just one trading range that you don't want to be a part of. Now, my expectations are this will eventually break out. Look at the volume that's occurred relative to anywhere else on this chart. I think that matters, and I think it's going to present an opportunity to the long side. Just be patient. Okay, this is definitely counter trend, but I do think we're bottoming on bonds. I've started to nibble on some outdated calls that expire in June. At the money, a little bit out of the money. I've started this position the last week or so, and it looks very poised as I continue to use that word to make a move higher. And if that's the case, you want to be long bonds because the trade has been to be buying bonds, and if that trade unwinds, it could have a pretty good push higher. James River Coal, the coal story looks pretty good. SM Energy, I don't know much about this company, but I love the chart setup. I think you look at these recent lows, $70, which is a $6 move, as your lows, and I do think you look for $90. I think you look for $100 on upside, but I don't know much about the company. I just know that it looks very. This is an opportunity, and I think it's a relative cheap shot. It kind of looks like Under Armour, which continues to work to the upside. This was a good trade. This continues to work. This probably turns into an investment. Polaris consolidating, Celgene pulling back, but at the bottom end of the range. Something to be aware of. Look for a bottom in the next couple of days. If that's the case, then go ahead and buy some if you aren't long, and put a stop right under those lows. So, anyways, this is a long video. Going to cut it off here. Have a good night. Make sure that you have your profits in check and you're not giving away, on any pullback, but be aware of the opportunity. So take care. Have a good night.